Let us try now with some polling to see if you can handle it and if we can actually use this tool or if we should forget about it. And so in this polling, you should see now on the right side where the chat function is, there are actually 3 questions. And all you have to do is make a little tick where in the box where you say this is the right answer. So from which country or region are you joining us today? You see from A to G, there are various options you have. Then the second question would be, for what kind of organization do you work for? Again, you have various options to answer. And last but not least, how familiar are you with comprehensive climate and disaster risk management? Again, you can choose between very familiar, somewhat familiar, not familiar. I'm here to learn. All of those answers are good answers. There isn't a wrong answer available, but we'd like to know what you think. So time is running now. Please make your choice, and then don't forget to submit. So we've finished with the polling now, and we should be able to see the results. That always takes a couple of seconds until we see the graph right next to the answers. There we are. Okay, so the majority, again, just like this morning in the Vietnam session, is from Europe, but then a substantial amount also from Africa. Sadly, no answer. 11 participants have not answered, so I can only think that they either just don't fancy it, because it shouldn't be too difficult to handle. Then we see that it's a pretty balanced organization there, government, public organization, private sector, and international organization. A few NGOs, very little academia, one, so welcome to whoever represents academia here. Then we have other, whatever that means. And again, quite a few who didn't answer that question. And the same with how familiar are you? You're very familiar. Well, that's good. Then I look forward to your contributions in the panel discussion. The same goes for somewhat familiar. And of course, everyone who is here to learn, you're more than welcome. That's a good reason to join. So, okay, so now we have a little bit of an idea who we are, all those participants, and we can actually get started now with this session. And first of all, of course, the framing session, taking a closer look at Kenya's proactive risk managers, and hopefully also get some lessons learned there on how to build resilience together. And for that, we welcome now Sunya Moronge Ore, Director of the National Drought Management Authority in Kenya. So Sunya, I can see you. All you have to do now is activate your microphone, and then the floor is yours, your presentation. The time slot is 15 minutes. We look forward to it. Over to you.
Good afternoon, Monica, fellow participants. I'm going to present our experience, the Kenyan experience. I work for the National Drought Management Authority. We cannot say that we have a very perfect system, but as a country, we have attempted to provide certain solution to disasters that often occur in our country. Next slide, please. Yeah, so in terms of the outline, I have the background. I will also share with you common disasters affecting our country, the economic impact of such disasters, and what are some of the instruments that we have developed to address the disasters. Next. As a background, drought and floods are the most common disasters in Kenya, of course, currently, and which is global. COVID-19 and the desert locusts are also some of the disasters of major concern to the country. When it comes to the droughts, 84% of Kenya is classified as arid and semi-arid, making it highly prone to droughts. However, in the recent past, floods have also been occurring, mainly flash floods. It could rain elsewhere, but affects the low-lying areas. The enhanced rains, for example, pounding the country a few months ago, parts of the country resulted. For example, March to June 2020, we lost 325 people to floods. 252,000 people were displaced. Now, and October, December is normally our rainy season. We refer to it as the short rainy season. The forecast was that the performance will be poor. La Nina was forecasted, and the country is therefore bracing for a drought few months after experiencing floods. So you move from one vulnerability, one disaster to another. We move from drought to floods. So before you recover from one disaster, you are in another. And those are some of the impacts of climate change. This slide gives us is a snapshot of some of the disasters that occur in our country. And the one showing the map with the red color and the blue colors on the right is the reporting by the media for the 2018 floods. So we experienced droughts, and when there's droughts, the people that we see with the yellow containers, those are congregation of poor vulnerable people during drought season. So water is one of the key challenges. During drought, water is the biggest problem. We also experience, not very much, a bit of volcanic activities. We experience landslides quite often during the rainy season, and the desert locust. Yeah, and on the right, we are seeing during that period, 2018, we just emerged from a drought, and during the flood season, the counties, the red color, those are also the counties actually that are normally arid and semi-arid, that are also prone to the drought. So the floods also disproportionately affects them. During that period, 2018, and this is a media report, 124 people killed, 40,000 households displaced, 264,000 people displaced, 2 or 5 schools damaged, and the schools are normally one of the major victims as well. 500 million needed for the victims, and this is actually not making them fully recover, but just to address some of their very immediate needs. But of course, now COVID-19 is here with us, which has disorganized because it has affected markets, it has affected movements, yeah, and then the desert locust. And for this period, actually, we had all this together. We had the pandemic, the COVID-19, the desert locust is still going on. Thankfully, we have the support of some of our partners. We are able to manage. And then now we are moving, then the floods, and then now we are moving again to the drought. By January, we'll actually be dealing with the drought. Still, the locust will still be around. And of course, the COVID-19. Next, yeah. This gives us the economic impact of droughts year by year. And you can see 1997 up from 1997-98, 1.2 billion US dollars in terms of damages, 8 to 1.2 billion US dollars, 2.5 billion 1992, 1999, 02. And those are the kind of impacts that we experience on year-to-year basis. The impact on the GDP, as you can see, the highest was 11%. That was 2009-11 drought. 2.9%. And for some areas, we didn't really do post-disaster assessment, so we don't have the very actual figures. So you can actually then visualize the kind of impact it has on our economy. This is the economy, but you can imagine the people, and these are people with names, faces to them, people who lose their livelihoods, their livestock, and the other assets, and who sometimes end up becoming beggars. Next. The overall, and this was one of the worst droughts that we have experienced. Overall effects, for example, of 2008-11 drought in Kenya was estimated at 12.1 billion in terms of losses, which included also destruction of physical infrastructure, some of the durable assets. That drought affected our GDP to the tune of 6.5. We have been experiencing, the impact has been 3.8, because just like many African countries, we are dependent, economy is dependent on agriculture, and agriculture, which is basically rain-fed. Yeah, so in that year, the growth rate declined from 3.6 to 0.6. The agricultural sector contracted by 2.7. Electricity generation decreased. Next slide, please. Yes, and what are some of the instruments that we have developed as a country? With the support of our partners, we managed to come up with frameworks to address this challenge in order to protect the economy, bring about fiscal stability, and protect the lives and livelihoods of the vulnerable communities. So we developed a policy and legal frameworks for disaster risk management, integrated disaster risk management in our planning, budgeting at both national and the county level. Subnational, in our case, is the county level. And actually, we have the law allows the county governments to spend 2% of their budget on disaster risk management. And at the national level, we have developed quite a number of instruments. Establishment and strengthening of institutions for disaster risk management. We have, for example, the National Drought Management Authority, where I serve, which is responsible to provide credible information, and it is also answerable when certain actions when there's an impact of drought and an action is not taken, is held accountable to respond to various actors. We also established disaster financing instruments, and there are quite a number, and I will present that slide later. We also have sector-wide and economy-wide approach to disaster risk management. So it cuts across a number of players, and at the very high level, the cabinet secretaries sit in the various committees. So we use our sector-wide, economy-wide approach to disaster risk management. And the most important is the existence of high-level champions. And these champions actually include the key one is the National Treasury, which has actually owned most of the instruments, has provided leadership, and has therefore, whenever need arises, been in a position to support us. Of course, with the support of also quite a number of our partners. Next. Yes, in terms of coordination, because when it comes to disasters, you must have a coordination framework. The country has an elaborate framework for coordinating drought risk management. For other disasters, we are still working on it. We have quite a number of institutions, but there is now a bill, a disaster management bill, which is going to harmonize all those institutions under one umbrella and provide proper coordination also for the other disasters. Yeah, so for the rapid onset, we have mainly, we have some institutions, at least 3 of them, under the office of the president. And we also have some ad hoc, mainly ad hoc. Wherever there is a challenge, committees are constituted. But this bill is going to address that particular challenge for the rapid onset disasters. Next. As a country, we have a disaster financing strategy, which was developed with the leadership of the National Treasury. And the goal of this strategy is to increase the ability of the national and county government to respond effectively to disaster, thereby protecting development goals, fiscal stability, and well-being of the citizens. It has four priority areas, and the first one is ensuring coordinated approach to disaster financing, risk financing across national and county governments, managing various disaster risk financing instruments. We have developed quite a number of instruments, and we therefore have a mechanism for coordinating that. Improving sovereign financing capacity by strengthening and expanding the national and county government's portfolio of disaster risk financing instruments. Supporting key programs to protect the most vulnerable populations from the impacts of disasters and contribute to building resilience. And finally, enhancing the capacity to respond to disaster of national ministries, departments, and agencies, as well as county governments. Next. So in our strategy, we have adopted a risk layering approach to disaster risk management. We have various instruments, and these instruments include risk. At the center, we have the risk retention, where we have sovereign contingent financing. For example, the catastrophic drawdown option with the support of the World Bank, which has a portfolio of US dollars 200 million. We have already accessed this for the flood and COVID, and we are going for the next program. We have quite a number of project contingent financing, and this includes shock responsive safety net, the hunger safety net program, with the support of World Bank and DFID. Now, we also call it Kenya Social Inclusion Project because it has other components. We also have National Drought Emergency Fund with a portfolio of 20 million US dollars, which is a national fund for drought. We have Contingency Fund, which is a constitutional fund of 10 million US dollars. We have the county level, the total of the 47 counties. We also have we also receive support from the European Union. We have a fund, Drought Contingency Fund, and actually this fund help us establish systems, many systems for managing drought. We have also a number of index-based risk transfer mechanisms, and the first one is Kenya Livestock Insurance Program. Kenya Livestock Insurance Program, Kenya Agricultural Insurance and Risk Management Program, ECA Africa Weather Index, Crop and Area Yield Insurance. We also, as a country, for a risk transfer, under the risk transfer, also at some stage we were in ACT. At the moment we are not, but we are currently engaging. The green areas, those are within that framework. The country has planned for ensuring budget fiscal stability, and will be comfortably be managing its disasters. But if it goes beyond that, disasters, then we might move to the next level, which is not the preferred level of budgetary allocation, humanitarian aid, emergency financing, such kind of appeal. But as a country, we hope to manage our disasters within the frameworks of risk retention, risk transfer, and only under very unexceptional circumstances, then move to the next. Then, of course, the budgets will be destabilized, the appeals will be made. Next. Next slide. Yeah, so that's the end of my presentation. If participants have any questions, they may ask, but I will wish to add further that the mechanisms, the various instruments that we have established, and the ownership of and leadership of the National Treasury, and the high-level ownership has helped us as a country be in a position to respond to various disasters within good time. And the various studies conducted has actually shown that as a country, we have made significant milestones. We don't know with the COVID-19 whether that, because priorities are also shifting as the focus also shifts towards this pandemic. I'm seeing quite a number of my colleagues around. Probably they will also be in a position later on to respond to some of the issues, and also some colleagues from World Bank. I've seen Elfie Barry somewhere. I'm sure they must be somewhere among the participants. When issues are raised, I hope they will also be in a position to support me. So thank you very much.
Well, thank you, Sonia there. And yes, I mean, as you pointed out, we have. I've just checked among the participants. We have about 74, 75 participants, so quite a huge chunk, and certainly also a lot of those who will also submit questions that I'm sure you, Sonia, and all the other panelists, who I'm going to introduce in just a moment, will be eager to discuss and to answer. So just a reminder again to all the participants, you can use the chat for problem solving, which has already happened, but also to submit questions so we can pass them on to the panelists. But before we get to the panel, let's engage you again, because it's midday, where for many of us, we've heard most of us are in Europe, so this is always the time where it's a bit difficult to get the energy juices flowing. So we have another polling for you to find a little bit out about what you know or what you think to know about Kenya, and if we could get the back office, here it is. So we have again 3 different questions. For one, Kenya is renowned for breaking world records in basketball, running, or judo. You can decide and submit. Second question, how many official languages does Kenya have? 68, 2, or 12? And then we have another one. Between March and June 2020, Kenya, among other 18 countries across Africa, has been affected by floods from the widespread rainfall. Approximately how many people have been affected in Kenya alone by these floods? Well, I think if we've just paid attention to Sunya, we should have a good idea. 1.21 million, 800,000, or 100,000. Again, this is not a test. You will not get a certificate afterwards that you're right or wrong, just to give us an idea where you stand. So the polling starts now. Please don't forget to submit, and then we will see the overall result where you're standing. So it's finished. The polling has been finished. Now we're just waiting for, this is always a little technical moment where we have to wait for the result to appear. But there it is. So, yep, the majority of you got it dead right. Kenya is renowned for running when it comes to sport. About 35 of you didn't fancy participating or couldn't find our polling. Pity. Again, when it comes to the official language, the correct answer would have been 2. So 10 of you got that. 12 is quite ambitious. And last but not least, here obviously the more serious question there about those being affected by the floods. And it is sadly the number 1.21 million who were affected. So most of you there got the right idea. So this is just where we're standing. And I think it's also quite interesting to find out with the pollings where you're standing or what your ideas are on these issues. So with that, let's now get into our panel discussion, Kenya's proactive risk managers, and sharing lessons learned on how to build resilience together. And for that, we welcome back Sunya Moronge Ore, Director, National Drought Management Authority, Kenya. He just did this wonderful presentation for us. Then we also welcome Enoch Asingwe, Agriculture and Climate Insurance Consultant at Syngenta Foundation for Sustainable Agriculture in Kenya. We say hello to Rachel Flaherty, Finance and Investment Advisor for East Africa, Foreign Commonwealth and Development Office in Kenya. We say hello to Lorena Brass, Resilience Program Officer, World Food Program Kenya. And a big hello also to Avi Kalkett and Barry Patrick Maher from the World Bank. And last but not least, Ashok Shah, Chief Executive Officer at APA Insurance in Kenya. And if all those who just heard their names, if they would activate their video function so we can actually see them all, then we know that they're all here. So I can see Rachel there. Okay, so this is the kind of screen that I was hoping for. Some are still missing, so Ashok and Sunya have switched their videos off. Okay, so there's one more missing because we should be 6. Okay, so here we are. Okay, so hello to all of you. Good to have you with us. And let me start with one opening round, a question that I'm sure all of you can contribute to. From your perspective, from your field of experience, what would you say are the most important milestones and changes in disaster risk financing schemes and mechanisms in Kenya over the last years? And perhaps, because it was the first one I saw, perhaps we start with Rachel. So Rachel, if you would like to activate your microphone, and we're all ears.
Hello, and thank you, Monica, for that introduction, and also to Sure for the great presentation. And hello to everyone who is participating today in the session. So as Monica has already outlined, I am the UK's Foreign Commonwealth and Development Office's Finance and Investment Advisor here, based in Nairobi, but working across the East Africa region. And my role is primarily concerned with promoting development of the financial sector and promoting more investment into development-friendly businesses and sectors here in the region. It's worth saying that obviously with the global efforts on climate change at the minute and the UK's presidency of COP26 next year, climate resilience, climate mitigation and adaptation are huge focuses for us globally, but particularly in Kenya. So that's where I'm coming from today and how I'm approaching this. So just to run through, and the UK has had the privilege of working with many of the other panelists today on a number of the key initiatives and milestones. So I will let Barry and Sure and others talk about these things in detail, but just to provide a kind of a view from the UK. So we are really pleased to have supported Kenya over recent years as they've gone on this kind of disaster risk financing journey. As I've said, through our partners at the World Bank, with Barry, the Centre for Disaster Protection, our close work with Government of Kenya, NDMA, and also partners like FSD Kenya, who played an important role in establishing the Hunger Net Safety Programme. So I think we've seen a really positive shift here in Kenya from basically a post-event response, which of course, as many of those will know on the call today, is very costly and ineffective, to a prepayment model, which was really pioneered by the Hunger Safety Net programme. It's far more efficient and effective as a response mechanism, and obviously protects local markets during crisis. And a couple of things just to pick out from that program, and as I said, I'll let Barry and others speak about it in more detail, but I think there are a couple of things that I would pull out. One is the introduction of a scalability model and the use of more scientific, objective triggers that unlock payments in a very targeted way to affected households when disasters and climate shocks strikes. And I think also we've seen alongside that program considerable investments in preparedness, so kind of pre-registration of beneficiaries, predetermination of payments, clearer information on who is protected, and so on. So that has facilitated that program in particular being far more effective. A couple of things just to add on. I think we've seen really great involvement and leadership from the government of Kenya, as Surrey has kind of demonstrated today, with a very clear proactive identification, rollout, implementation of a whole range and spectrum of disaster financing mechanisms in collaboration with development partners and private sector and others. And I think, Sonia touched already on the CAT DDO. For those of you who are not familiar with the CAT DDO, I think this was a really, really important milestone. It's the world's first IMF kind of catastrophic drawdown option, and it's really come into its own during the latest kind of COVID pandemic, where actually we saw, I think the figures are only 2% of flows from the IFIs during this pandemic were pre-planned, but the vast majority of those were from the catastrophic DDO, payouts of about $130 million. And those payouts were much faster. So I think it was around a 2-day response rather than the weeks and months that we would normally expect from IFI interventions. Of course, there's the disaster risk financing strategy. I think we could come back to a conversation on where we go next with that later in the discussion. The thing which is really, where my role comes in is around the involvement of the private sector and the financial sector, who really started taking this far more seriously in Kenya in recent months and years. So we've seen the likes of Absa Bank and other banks signing up to global principles on responsible banking, taking a more and greater role in sustainable finance, and also regulators like the Central Bank of Kenya working on guidance for how the financial sector at large integrates a better understanding or better integrates climate risks into the financial sector. So a whole host of different things there, but there's just some of the things I would pick out. Thank you.
Okay, well, thank you, Rachel. Thank you for that. First of all, thank you for setting the bar. I forgot to mention earlier that, and you can stay, you can do video on, and we still know that we're part of the panel. That in this opening round, it would be brilliant if everyone could stick to about 5 minutes for their first intervention. So we do have room for follow-up questions, and you just did that perfectly without me even mentioning it. And of course, you teased Barry so often that even though it wasn't my plan, I can't but have to hand over to Barry now, and his assessment of the most important milestones and changes there in Kenya over the last few years. And I believe, Barry, you also have a slide that will support your intervention. So over to you.
Yeah, thanks, Monica. Thanks for putting the slide up. Rachel touched on a lot of these things, so maybe I'll just fill in some of the gaps. I think for me, the key milestone or the key event which triggered, this graph which Sonia presented another version of. The key event was the 2008 to 2011 drought, which happened in Kenya, which was a really devastating drought. Losses to the tune of kind of $12 billion, which is around 12-13% of 2011 GDP. So they had this really catastrophic drought, which lasted 3 years, 2008 to 2011. And when this happened, the government of Kenya kind of decided to change how they approached financing disaster response. They wanted to be much more in the driving seat, take a much more leadership role. And they reached out to kind of, all their kind of development partners and international organizations to help them take on that approach. And so, I started working in Kenya around 2013 with the governments on their crop and livestock insurance programs. And, from that drought, 2008, 2011, now, I suppose fast forward nearly 9-10 years, and Kenya, I think it's safe to say, has the most sophisticated risk financing strategy and risk layering strategy, which is shown on the graph in the Africa region. One point I would make is that, it took time to build up these different financing instruments. I mean, the way the government of Kenya did it was quite organically. The crop and livestock insurance programs were launched in 2015. The shock responsive safety net, which Rachel mentioned, was also launched in 2015. And then the CAT-DDO, which is this contingent line of credit between the World Bank and the government of Kenya, that became effective in 2018. So kind of year by year, the government kind of added more and more financing instruments until now they kind of got to a stage where they have quite a comprehensive range of financing instruments available, which they use to respond. I think the approach which the government of Kenya took, which I think is definitely a lesson to be learned for other countries, I would say both high income as well as low middle income, is they really tried to crowd in and to use private sector expertise and private sector capital. And so Rachel mentioned this, the use of kind of banks for delivering emergency payouts through their safety nets. They use insurance company capital, insurance company expertise to implement their crop and livestock insurance programs. So the government, I think, has been very savvy and very strategic in terms of how, when to use their own resources and when to actually kind of, rely on and crowd in private sector capital and resources, and to create the enabling environment and, providing incentives to do so. Another kind of key point in terms of the milestones, the World Bank had been kind of working with the government of Kenya on this, as I said, for probably close to 8 or 9 years. Personally, I've learned so much from the government of Kenya through this process. It's been a country where I've really kind of expanded my risk financing understanding from kind of learning with them. I mean, another key kind of I would say player in the journey has been kind of donors, development partners. So what was previously DFID but now FCDO has played a really kind of crucial role on strengthening the risk financing agenda in Kenya. They've been kind of staunch supporters of the Hunger Safety Net program from the very start, and they've been very interested in, Rachel mentioned this point of kind of having a more kind of objective, transparent approach to launching or mobilizing resources to finance disaster response. And this is kind of really an approach which the government has been driving, but it's been really supported by key development partners like Kenya. I think now we've come to 2020, which I think is another key milestone in the risk financing journey of Kenya. The CAT, of course, because of COVID. I mean, we all, how could anyone forget COVID? And just to conclude, I mean, the CAT-DDO, which is this contingent line of credit between the World Bank and the government of Kenya. I mean, it was a $20 million loan, but by contingent, it sits on the shelf. So the resources are there, and the government can draw them down in the event of a shock of kind of large magnitude and the declaration of a disaster. The government, Kenya was the first IDA country, the first low-income country to access this instrument, this CAT-DDO. And so from the World Bank side, there's a lot of people. I mean, I co-lead the project, but from the bank side, there's a lot of people kind of wondering, will Kenya have the fiscal discipline not to, I suppose, immediately draw down the money from the CAT-DDO and disperse it? This was kind of an open question within the World Bank. And I think, really the behavior of the National Treasury in Kenya has been really exemplary in this regard. The loan became effective in 2018. Of course, when this loan became effective, no one had pandemic or COVID on their minds. You know, it was primarily established to respond to droughts and floods. In 2019, you know, Kenya was impacted by pretty severe flooding events, and the government drew down around 35% of the resources, so $70 million from the CAT DDO. They didn't draw down the full amount, and you know, the reason when we were discussing with Treasury, which of course they could have, they were entitled to, they said, no, we want to hold some resources back in case we're impacted by a future shock. And you know, that decision, I think, in and of itself shows tremendous fiscal discipline from the National Treasury, you know, recognizing that they are exposed to other risks. Again, in their mind, they were thinking droughts, and they wanted to have, you know, that $130 million which remained in the CAT DDO available to respond to future events. You know, then, you know, fast forward to now, COVID-19 pandemic breaks out, and the government, you know, declared a state of emergency to respond to COVID-19, but that also unlocked the remaining resources of the CAT DDO, and the government drew down the remaining $130 million from the CAT DDO and used them to support the COVID response. So again, I mean, again, from my side, I've been so impressed at kind of the behavior and the fiscal discipline of the government of Kenya with using the CAT DDO. And yeah, I'll stop there. Thanks, Monica.
Okay, no, it's fascinating, and it really it breaks my heart to intervene there, but I just have to keep everyone else in mind, and I'm sure we can pick up again. And again, to all the participants, please do join the discussion, submit your questions, and this way you can basically dictate in which direction the discussion is going. Else, I would now like to hand over to Lorena, Resilience Program Officer at the World Food Programme, and just get your 4 or 5 minutes thoughts on the milestones and changes in disaster risk finance scheme in Kenya over the last few years. If you would share your experience with us, Lorena, over to you. Please activate your mic.
Thank you, Monica. For a few seconds, I missed because I think the connection is a little bit unstable. If you could please repeat the question. Sorry.
Right. It is actually, it would be the same question as before. As I said, it is the opening round, basically finding out what you see as the key milestones and changes when it comes to disaster risk financing schemes in Kenya over the last few years. If you don't need 5 minutes, that's fine, but This is the time that you would have now.
Okay, thank you. I think colleagues really covered major milestones, I think, for the Kenyan context. Working for WFP and particularly involved in the integration of insurance with resilience programs, I think for us what's been really impressive is the development of the microinsurance, the crop insurance, especially for vulnerable populations in Kenya over the years. Of course, the coverage is still low, but you see so many different actors from private sector with the support from the government, but also new development partners really investing in this protection layer to the smallholder farmers. So Shunya earlier on touched upon some of the programs like the Kenyan National Livestock Insurance Program. We have the National Kenya Crop Insurance Program that WFP contributes to. WFP's program, the R4 Resilience, also has been scaling up over the past 3-4 years with a lot of support and interest from different partners. And then we have also seen an interest from the insurers themselves in really supporting, promoting these crop insurance solutions in new areas like the semi-arid areas where we are in. It's really good to see a member of the APA here who has been a strong partner for WFP over the years. I think probably just an add-on the idea of the importance of developing the crop insurance market for protection of these vulnerable communities, especially in the arid and semi-arid lands of Kenya. Over for now.
Well, thank you so much, Lorena. And because you mentioned partnerships already, I would like to bring in Enoch, and I can see that there's already a question in the chat for Barry. But Barry, if you would allow me to let the other participants join us first. So Enoch, apart from the milestones and changes that you've observed in the disaster risk financing scheme in Kenya over the last few years. Perhaps you could also include the kind of experience that you had working with both local and international partners in Kenya. Maybe there's a milestone even there that would stick out that you would like to share with us. Enoch, please activate your microphone, and then we're all ears.
Okay, good. Thank you. I think apart from the milestone mentioned by colleagues, I think some of the key evolution that we've seen in Kenya is around scale of projects into commercial programs. An example for that is the IBLI, which is the Index-Based Livestock Insurance Program, which was a project under International Livestock Research Institute that has evolved into a commercial program run by various partners. Another case example of a project was the Kilimo Salama project, which was a project under Syngenta Foundation for Sustainable Agriculture. After 5 years, the project transitioned into a social for-profit entity, which is ECA Africa. And we've seen a number of intermediaries coming up in the risk transfer space, the likes of ECA. We have the likes of Pula Advisors. We have also other intermediaries like WallCover. All these entities are trying to support in innovating different financial instruments around risk transfer. Another important element is on data. We've seen also evolution on investment and use of data. Initially, when climate insurance program started, it started with the use of weather stations. And these weather stations, are limited to a small space, or are limited to a small area. So there've been need to invest on a number of satellite technologies with even high resolution, covering even a small unit area. We've seen this investment coming from the development organization, some of the international organization, and even the private sector itself. And I think finally on that is we've seen also sort of a competition platform emerging. This is to say different competing partners working together towards a common goal. A specific example is the consortium for the 6th insurance company supporting the underwriting of public-private partnership initiative run by the government. That is the Kenyan Livestock Insurance and the Crop Insurance. And good to have Ashok, who is taking lead, and APA took lead in the development of this consortium. Thank you.
Yeah, exactly. Thank you so much, Enoch, for tossing it now over to Ashok Shah, because of course these are the two issues, the Kenya Livestock Insurance Program and the area yield index insurance for crop, that we would like in this context to hear a little more about. So Ashok, if you could keep it to 5 minutes, but we very much look forward to it.
Yeah, thank you, Monica. It's great to be here with the rest of the panelists to discuss this issue of resilience to basically to climate change. What has happened is, I think in the past, what used to happen was when there used to be a disaster, as Sunia mentioned, the government had to come in, and the government always comes in immediately after the disaster. It can't participate in the disaster that is happening. And so what would happen is that like when it comes to drought in the northern Kenya, there will be millions of livestock that would be suffering from that drought, and a lot of them would be lost. And the government would then come in and try to help the community. And in the same way, even in when it comes to crop, the same thing happens. Is when there's a drought or a flood, then what happens is that the government will come in to try to help the people after the event. So about, you know, as AP Insurance is basically a Kenyan company, but we have a shareholder which is Swiss Re, is one of our strong shareholders. And we decided that we would like to look at increasing the market share that we have in the unpenetrated market, for people who are excluded, financially excluded. And we saw the opportunity in both the livestock cover and also in the crop cover. Because what was happening was that people who don't know about insurance, the pastoralists don't know about insurance, the smallholder farmer doesn't know about insurance, and they don't know what insurance can offer to them. So we took that as a challenge to see how we can expand insurance protection to them through different ways. And the partnerships are very, very important for us. If you know, we started talking to Hillary, we started talking to, in fact, Lorena mentioned about the World Food Program for the crop, and we said that we will look at providing covers to the farmers and to the pastoralists. And what has happened is that we have started learning a lot of things. So, for example, when the crop when we started looking at crop, initially we started with weather index. So it was either excessive rainfall or too little rainfall. But then we saw that there was not, we were not able to cover the needs of the farmers. So we decided that we should look at much broader cover. And with the support of the different partners, we came in with the area yield insurance cover. Now, the area yield insurance cover actually covers the farmer for most of the perils, and right now also for locusts. So when a farmer does not get the right yield from one of the perils that is covered, then they will get paid for the difference from what they have got and what they should have got. So that's something that we have done. And for the pastoralist, what has happened is that we don't really cover the lives of the cattle. What we cover is the forage on the ground. And the forage on the ground is measured by satellites, and then what happens is the satellites then that certain areas there is not enough forage on the ground. So what we do is we declare a trigger. When the trigger is declared, the pastoralists actually get an amount of money to go and buy food stock for their animals to keep them alive until the next rains. So what has happened is that we as a private sector player, we have come in and we have started supporting the government in its risk mitigation from both drought and other areas where the farmers and the pastoralists suffer. So what we have done is we are working with partners. We are working with Acre Africa to see if they can design products which we can then actually have the covers provided for them. Now the thing is what happens is for private sector to come in, this is an enormous enterprise for us because we can't afford to pay the claims. So we require a lot of goodwill. The goodwill that we have is with the government. We have a partnership where the government pays 50% of the premium for the farmers, and for the livestock, it chooses the family, the most vulnerable family in that area, and they are covered, and the premium is paid by the government. But then we also what happens is we need the capacity in Kenya. So as APA, we went to some fellow insurers and we asked them if they would be willing to join us. So we got about 6 companies which are supporting us in this program. And then what happened was we needed the reinsurance. So we've had fantastic support from Swiss Re, Africa Re, who have supported us to cover these risks that we have. And up till now, we have paid much more than what we have received in premiums. We would have received in premiums something like 500 million shillings. We have paid out more than 1 billion shillings. But what we are doing is that what we are hoping is that when the take-up of this sort of covers take place, the disasters that the people suffer from, the farmers, the pastoralists, and so on, they will understand that there is a mechanism of mitigating the risk, not waiting for the government to come and help, but actually coming to private sector, and private sector supporting them by giving them insurance covers, which are perhaps the most unique in the world right now. Especially the livestock insurance program is the only one in the world of its kind. There's none other. Thank you.
Right. Thank you so much, Ashok, there. And just to inform you, and I'm sure you see it also in the chat, there is a lot happening there, and I'm going to forward some of those questions to you now. Just checking if there's any comments on what's been said so far, anything that you would reply to, either to Ashok or to Lorena or Enoch or Rachel or whatever, then you would just give me a show of hands. And otherwise, I'd move on now to the first question that we received from the floor, which is a question to Sunia and Barry. So it is something that please the two of you would answer. How has the coordination between the various ministries worked out re agri and finance requirements for modified regulation and others? And Sunia, we have a word from you in a while. Would you like to start first answering that question, please?
Yes, thank you very much for that good question. In terms of coordination between agencies, we coordinate first our planning. The planning happens for disaster risk management, and all the sectors are involved. They do the contingency plans together. That helps communities identify what they can take on board, what can be financed by the county governments at that level, and what can be taken at various levels. And we have also interlinked various programs in such a way that, for example, the Hunger Safety Net program has an infrastructure for cash transfers. We have registered all the households, ranked them, established their vulnerabilities. When it comes to the Ministry of Agriculture, which is the livestock insurance database, they use the database because the ranking has already been done, and the infrastructure also for the payment. So we have a very close working relationship, and when it comes to the CLIP, we also have research institutions like ILRI, World Bank, that help them in terms of, as a country, we started small, but eventually adopting some of these systems, of course, require time and eventually even confidence with the people, because eventually when it comes to insurance, it will be commercial. We also have other programs, for example, and we have an IFAD-funded program, Kenya Serial Enhancement Program. It layers on the resilience initiatives, the Kenya Climate Finance, again, mainly focusing on water infrastructure for crop production. When it comes to influencing regulations, because regulations are the ones which really govern elements of enforcement, I can't think of a regulation, the implication of these programs on various regulations affecting this sector. But definitely, if that's identified through this coordination framework, we have been in a position to influence quite a number of and strategies. Through these frameworks, also established National Drought Emergency Fund, which addresses, is across all the sectors, water sector, health, education, that are affected by the disaster risk. Of course, then the regulations comes with various acts. Once developed, then we operationalize the regulations. But I don't have any specific regulation in mind at the moment. But the coordination works across.
Okay.
Yeah. Mm-hmm.
Right.